Let's talk about, with respect to ASEAN, you like Indonesia and Singapore. They've been moved up to overweight, and Thailand to market weight.
Yeah, that's right. Really, the big picture on ASEAN is that it has underperformed the rest of the region and indeed the world for literally the last decade. If you zoom out and look at say, a 30-year chart or at least a 20-year chart of the relative performance of the ASEAN sub-index versus the broader regional index, it goes in sort of larger sort of cycles. And we've just enjoyed, quote unquote, a 10-year down move. And we think that's coming to an end for three key reasons. One, because economic growth is actually going to recover and improve next year in stark contrast to most of the rest of the world. And that's, of course, as the region comes out of its COVID-inspired downturn. Number two, we're going to see monetary policy start to firm. There's a normalization pattern or trend going on globally. And that should be good for the banking sector, which is the largest sector within the ASEAN regional index. And then third, and excitingly, there is a trend towards the digital economy becoming more evident within the overall index. So the key numbers here are that the internet sector is currently 6% of the index. That's going up to 17% in just a few months as greater proportions of various companies are included in the index. And as we have further IPOs or further introduction of digital economy companies, you're going to see the nature of the ASEAN index begin to shift. And that echoes what's happening currently in India and also, more importantly, what's happened in China in the last 10 years and the significant wealth creation that took place as a consequence of that shift. So we think there's a number of reasons to take a more constructive view on ASEAN, and that's why we've done our upgrades.
Okay. Final question before we let you go. You just mentioned there what you've done with India, but also South Korea there. Both of those markets being moved back down to market weight by you?
Yeah, super quick. It's not because we're particularly bearish, but obviously you have to make room for a market as large as China in terms of overweights and underweights, just to make sure that everything adds up. In India's case, it's very simply just a case of valuation. The market's a bit ahead of itself in terms of valuation. I'll give you two statistics. One, the forward 12-month price earnings ratio is about 23 times earnings, which is 2.3 standard deviations above the 10-year mean. And number two, the relative valuation of India versus the rest of the region is just recently peaked at 65% premium. And that's a record high going back as far as we have data. So we just think the market's a bit ahead of the fundamentals and needs to have something like a time or perhaps a modest price correction to allow the underlying earnings to catch up. So we're very positive in India over the medium term, just feel it needs to take a bit of a breather here. And that's more or less the reason in Korea. Korea is really just a function of slowdown and exposure to the global cycle. It's the most cyclically exposed economy and also quite sensitive to the semiconductor cycle, which currently is under a modest downturn. So we're kind of stepping aside in Korea until we might look to reengage sometime in the middle of next year. And all that, as I said, to make room for the upgrade of China.